Hi, it's Nishi, and today what I want to talk about is what is a run rate. So, run rate is a term that management accountants use quite a lot, but most business owners don't really know what it means, but it's very, very important. So, that's why I want to cover it in this video. So, one of the biggest challenges with getting a set of accounts done and then reviewing it with your accountant is if you waited to the very last minute to submit it, actually some of the information in that set of accounts, especially at the very beginning of that year in question, could be up to 21 months old. That's a very long time after the actual event to be looking at that information. So sometimes looking at, or quite often looking at accounts historically is not that valuable for a business, and that's why a business owner needs to understand the concept of what a run rate is, because it will help them understand how their business is doing today, and then they can make better quality decisions off the back of that. So a run rate is all about asking the question, if I kept doing what I am doing now, where would I end up? So quite often that means if I made the same amount of sales I did over the last 3 months for the next 12 months, what would it look like? We had the same level of expenses. If we had the same team that we've got now over the next 12 months, what would it look like to the bottom line? It's a really important number to understand because it helps you understand if your business is loss making today. There's no point in looking at a set of accounts that told you you made a profit over a year ago when you might be making a loss today and you might not be aware that you're making a loss in real terms. It's also really important to help you understand when you are making a profit over and above what you need for yourself as a business owner. It helps you understand what you've got left over as a surplus to reinvest in the growth of your business and do it responsibly. So the run rate is a really important concept in management accounting and accounting in general, and really any business owner should be able to understand and measure it for themselves. One of the best ways to actually understand the run rate in your own business is go to your accounting software. As long as you've kept your bookkeeping up to date, you can run a profit and loss report, especially in things like Xero, and that profit and loss report you could run for this month and multiply it by 12, or you could run it for the last 3 months and multiply it by 4, whatever you think is a reasonable period of time to reflect your performance. And just remember, when you do that, just remove any exceptional items, things you're not really going to have to pay for again, for example, like one-offs, and then that will give you a really good idea of what your business is on track to do so you can make better quality decisions. If you want to find out how we can help you with that, then definitely get in touch, and I'll see you in the next video.